Hello everyone, how are you all? Hope all of you are very fine. Myself Ratinder Chopra, welcome you all on behalf of Bankers Zone Arena to this new session. Today we are going to discuss a very important topic, bank reconciliation statement. In most of the examination where accountancy is concerned, so many questions come from bank reconciliation and it's sometimes very confusing. Today we'll discuss the easiest way to prepare bank reconciliation statement. So before starting, I request all of you to please subscribe this channel, share the videos in your group accounts, maybe WhatsApp, Facebook, Insta or Telegram, and also like the video. So thank you very much. So let's start with our topic. Thank you. Our topic, easiest way to prepare bank reconciliation statement. Very important, very important. If you remember, we all remember rather, we as an individual also make our reconciliation with the bank, maybe early, because we know how much we have deposited, how much we have sent the checks, or maybe ATM transaction like that. So that is very small. That is very small. So that can be done verbally also, orally also. But in the case of businesses or farms, where transactions are more or regular transactions, so many transactions, to keeping that in mind simply is not possible. So for that purpose, all firms or companies make a book, prepare a book, keep a book which is called cash book. This is simply a replica of passbook of the bank account in which they have the account. So it's very necessary to know whether our accounts are tallying with the banks. There can be many differences that we'll discuss. There can be many errors that we have to adjust while preparing the bank reconciliation statement. So it is all presumed that bank passbook is generally correct unless some major mistake come. Otherwise, bank passbook is presumed to be correct as compared to the cash book. So let's start our discussion on bank reconciliation statement, how it is prepared easily, and how the cash and the bank cash book and the passbook is tallied. Okay, are you ready? Thank you. So before starting the bank reconciliation statement, important point to be discussed. Very important point. This you must keep in mind. Number one, cash book. This is prepared by the firm or company. Cash book is prepared by the company. And secondly, passbook. Passbook is prepared by the bank. Now the question rises, if passbook shows credit balance, if the passbook shows credit balance, then the cash book will have debit balance. This is just a reverse. This is just reverse. So credit balance in the passbook means debit balance in the cash book. Let it be like this only. We can say plus or minus. So this is credit, this is debit. If cash book is showing credit balance minus balance 20,000, so here it will be debit 20,000. Debit means favorable. Cash in cash book, debit means a favorable balance. Okay, so let's come to the question arises. Number 3 point, if passbook shows credit balance, then cash book will have debit balance. It is also known as favorable balance. Means company has credit in the bank. So they have credit amount in the bank. So and reverse case mein, if passbook shows debit balance, if passbook shows debit balance, that means they may have taken the overdraft or cash credit account, then cash book will have credit balance. It is also known as unfavorable balance. Here again, I'm talking about minus. If bank has debit balance, then cash book will have credit balance. Okay, this is reverse of the passbook showing credit balance. And then number 5, debit balance in the passbook means overdraft facility or credit facility availed by the firm. So number 6 point is, if nothing is mentioned in the question, suppose you get a question to prepare a bank reconciliation statement, then it is presumed that passbook have credit balance and cash book debit balance if nothing is mentioned. If nothing is mentioned, it is presumed the passbook have credit balance and cash book have debit balance. These are very important points. Very important points. Means cash book prepared by the farmer company, passbook prepared by the bank. If passbook shows credit balance, then cash book will have the debit balance. It is also known as favorable balance. Number 4, if passbook shows debit balance, then cash book will have credit balance. It is also known as unfavorable balance. And number 5, debit balance the passbook is overdraft and cash credit. And number 6, if nothing is mentioned in the question, then it is presumed that passbook have credit and cash book have debit balance. Okay, so let's move ahead. What is bank reconciliation? We have already discussed in simple way. The main purpose of bank reconciliation statement is to compare the bank records of transaction for an account with the account holder record. It means the purpose is to comparison of the cash book of firm with the passbook of bank. That has to be tallied. Ultimately, the purpose is to periodically that it should be tallied. So the purpose of the bank reconciliation is to compare the bank records of transaction for an account with the account holder account and make adjustment accordingly so that bank's account is reconciled. So the next point is, the bank reconciliation statement helps to check the correctness of the entries recorded in the books of the firm and thereby ensures accuracy of the bank balances. So what is the another important point in bank reconciliation? So bank reconciliation statement helps to check the correctness of the entries recorded in the books of account of the firm and thereby ensures accuracy of the bank balances. Important. Let's go stepwise preparation of this is very important. How to prepare the bank reconciliation statement in a very easy way. So number 1 point to be noted, put the balance of cash book or passbook as the first item in the bank reconciliation statement. Whenever we are preparing a bank statement, plus or minus, if it is as per cash book, then first entry will be plus. If it is credit balance in the passbook, then it is the debit side where the amount is to be written. First item is written the amount of the cash book or the passbook, whether it is favorable or unfavorable. So put the cash book balance or passbook as the first item in the bank reconciliation statement. Then secondly, the favorable balance of the cash book, that is debit balance or passbook credit balance, is to be shown under plus column. I've told you, if we are preparing as per cash book, so plus and minus, it will be debit, cash book will be debit and passbook is credit. If passbook is credit, then cash book will be debit. This will be a favorable, it will go in the plus account. If any firm has not availed any overdraft facility or cash credit limit, then the balance will be in credit and that will be shown in the cash book as a debit balance plus side, that will go in the plus side. Okay, and the second, an unfavorable overdraft balance of cash book means OD or cash credit or passbook debit balance is to be shown under minus column of the reconciliation statement. Means if the balance in the account of passbook is unfavorable means debit, then cash book will be written here in the minus side and passbook in the plus side. Okay, in the column of cash book. Okay, so clear about it. Once again, I'm making easy. Put the balance of cash book or passbook as the first item in the bank reconciliation statement. Whenever we will be preparing BRS, then first item has to be plus or minus of cash book or passbook, whichever is shown in the question. Secondly, the favorable balance of the cash book means it is called a debit balance or plus column or passbook credit balance. This is plus for the cash book is to be shown in the plus column, and unfavorable balance overdraft or cash credit balance or passbook debit balance is to be shown under the minus column of the bank reconciliation statement. So clear about it? Let's go to the next. Continuing with stepwise preparation of bank reconciliation. Then comes the, you have written the plus or minus. Let it be. Question is balance as per cash book. Let it be, it is a positive balance or a favorable balance. So here plus will come the balance. Here it will remain negative. So what we have to do? Quite possible है the bank balance as per the cash book and the bank balance as per the passbook may not tally. There are several reasons which will come later. So the impact of errors or omission in both the books is to be analyzed, and their effects should be suitably noted in the bank reconciliation statement. If anything is left out in the one, supposingly we are preparing as per cash book and we have the statement from the bank as per passbook, we simply check which entries have not come in our cash book and which are in the passbook but that are not in the cash book. So we'll check that and we'll make adjustment accordingly. So another very important, errors that have caused decrease in the balance of cash book shall be added. Supposingly passbook is showing more and cash book is showing less, then the items from the cash book which are showing more should be added to the cash book. These things should be added to the cash book if the starting point is cash book. If you are starting with a cash book, then we have to add those items which have been recorded in the passbook book but not recorded in the cash book. Okay, then similarly, errors that have caused increase in the balance of cash book shall be deducted if the starting point is cash book and vice versa when starting point is passbook. Now again question arises, supposingly cash book balance is more than the passbook, then we have to find out the entries which we have added, which the firm has added in the cash book but that is not recorded in the passbook. So that is to be deducted. But if the balance is as per passbook, if you are taking it as a question as a passbook, then these entry will be vice versa, added or added. We'll come directly into that. So thank you very much. Let's come. So 2 points of preparing the bank reconciliation statement. How to prepare bank reconciliation statement when? Number 8, the starting point is balance as per cash book. Favorable or unfavorable doesn't matter. When the question arises and they give the balance as per cash book, we have to start with the cash book, maybe positive or negative. And second is when the starting point is balance as per passbook, favorable or unfavorable. So 2 points to be considered. Number 1, when the question asks, start with the cash book. The starting point is the cash book, and the second is starting point is as per passbook. So 2 things can be there. Question may come कि भाई start with this cash book balance. Maybe it is overdraft or maybe favorable or unfavorable. Favorable is when the passbook balance shows a credit balance, and unfavorable when the passbook shows a debit balance, and reverse is the case in the starting point of balance as per passbook, favorable or unfavorable. Okay, so let's start with the point A. Point A, when starting point is balance as per passbook. Supposingly in the question they have given you the balance as per cash book. Balance as per cash book. When you have to prepare as balance as per cash book, if the balance is given as debit, they have shown a debit, so that will come in plus, or otherwise it will come in minus. अगर ओवरड्राफ्ट है माइनस, अगर रेगुलर क्रेडिट अकाउंट है तो कैश बुक में this will be plus, it will come in the plus entry. After that adjustment will be made. How those adjustment will be made, I'll come to that. So if the bank reconciliation statement is prepared with the favorable balance of cash book, that is debit balance of the cash book, or unfavorable balance or overdraft balance of cash book, then we have to add. What we have to add? What we have to add? All those transactions that have resulted in increasing the balance of passbook. We have to add all the items which have resulted in the increasing the balance of passbook. Balance of passbook is balance credit is 1 lakh. Here it is 90,000. We have to add all those items which are added here in the passbook, and they have to add it in the cash book. So how it will come? For example, check issued by a firm but not presented for payment of 10,000. Firm has issued a check, but party has not deposited that in the account. Then what will happen? Here balance is 90,000. Okay. Passbook shows 1 lakh. So why it has come 90,000? Because the firm has issued a check and they have debited that amount from their 1 lakh amount. They have debited that 10,000. So balance has come to 10,000. So what we have to do? We have to credit this amount in the cash book because it has not yet been encashed by the party. So for example, check issued by the firm but not presented for payment to be 10,000. In this case, the issue of check has been recorded in the cash book on payment side. The firm has issued a check and they have debited their account, their cash book, but it was not entered in the passbook because that has not been presented for payment. So therefore, bank balance as per shown by cash book would have been shown at lower than the balance as shown by the passbook. So this amount is to be added to the passbook. So clear about it? Let's go to the next. Those entry we have to add. Now what we have to deduct? Second, all those transactions that have resulted in decreasing passbook. So here the balance in the cash book is 1 lakh and the balance in the book of the bank is 90,000. So your balance is more than the bank balance. So what can be the possible reason? Let us see the example. A check of 30,000 received from Rajan, deposited in the bank. However, the bank could not collect the amount. Maybe let it be 70,000. Let it be 70,000. Balance was 70,000 in the cash book. Balance was 70,000 in the bank passbook. But the company deposited a check of rupees 30,000 in the bank. But that has yet not been collected by the bank. So here the amount has been 1 lakh. But here is 70,000. So what we have to do? That 30,000 which has not been credited will have to be deducted from the balance so that your passbook is reconciled. Bank reconciliation statement is prepared on a specified date. Some specified date they are prepared. So any entry after that will not be taken into consideration. All adjustment has to be made for the entries done before that date. Okay. So here a check of rupees 30,000 received from Rajan, deposited in the bank. However, the bank could not collect the amount. Okay, so in this case, the deposit of the check has been recorded in the cash book of the receipt side, but it was not entered in the passbook. Therefore, bank balance as shown by cash book would have been shown at a higher side than the balance as shown by the passbook. Definitely. So in other words, the balance shown by passbook would be lower than the balance shown by cash book to the extent of that check. So that means cash book balance is more, but bank balance is less than the amount of 30,000. So this is amount to be deducted from the cash book. Okay, thank you. So let's see a pro forma from where you will be able to clear how the statement is affected bank reconciliation statement. Very easy, very easy. So let's start. What we are saying, there are two ways of preparing the bank reconciliation statement. Number one, first, when cash book balance is given. Cash book balance is given may be favorable or unfavorable. Favorable when the party has a credit balance, unfavorable when the party has a debit balance in the bank. Okay. So let's see. Let's start how the things prepared. Number one, we have to, as already told, we have to start with the balance as per cash book or passbook as told by the question. So let's see. Question has come, balance as per cash book. Take it as a balance as per cash book. If it is debit balance, it's a positive item, favorable. Debit balance of cash book means the passbook is showing credit. So the debit balance of cash book means it has to be come in the plus side. So this has come in the plus side. If supposingly there is overdraft in the cash book means credit balance, bank firm has taken some overdraft, then that will show a credit balance in the cash book and that will go to the negative. Rest entries will be added or deducted on the same way. Only thing a plus and minus item entry we have to see. Supposingly balance as per debit balance, it has to be plus. Balance as per credit balance, negative item, because cash book credit balance means bank's debit balance. So that is negative for the firm. So now in those entries, what will be adding? Number one, all those transactions that have resulted in increasing the balance of cash book, passbook. We will be adding those entries which has resulted in the increasing the balance in the passbook. In the passbook, the balance is more than the cash book. So what could be those entries? Number one, check issued but not yet presented for payment. Check has been issued, so the cash book has been debited, but the bank has not been debited, so bank is showing more balance. So that amount has to be added to reconcile with the passbook. This is one point. Second, interest and dividend received by the bank. If interest and dividend has been received by the bank means bank has credited that amount in the firm account, but firm has not taken that into cash book. They have not credited with the cash book. So that amount will also be added. And third, direct deposit made by the parties. Sometimes the customer make direct payment in the bank, in some account, in the firm account. So, but the company doesn't know, the firm doesn't know, and they have not recorded that entry in the cash book. They have not credited that amount in the cash book, but that has been credited in the passbook, and the balance in the passbook has been increased. So that amount also to be added to the cash book. Number four, credit given by bank on account of interest. Same thing. Bank has credited the firm account with interest, which has not been credited in the balance book, which has not been accounted for in the cash book. So this amount has to be credited in the cash book because here the amount is less, passbook showing more, so that amount has to be added here in the cash book. And bills collected by the bank. Sometimes the checks are sent for collection for outside city, so that take time to collect. So bills or check deposited by the customer, by the firm, but have been received by the bank but not informed to the customer, or the customer has not taken into consideration the cash book, so that amount also to be credited or credited in the cash book. Then sixth is check deposited but not recorded in the cash book. This is important. Sometimes cash book checks have come, they have straightway sent to the bank for collection, but have not been recorded in the cash book. They have not shown the cash book, and that has been collected by the bank, and the bank passbook shows a increased balance. So that amount has also to be added. Okay, so these are the points to be added. Once again, I'm repeating it. So first of all, the first point we have to take is the balance as per cash book. If it is positive, favorable, then it is plus, otherwise minus. Favorable means the passbook shows a credit balance. Negative means unfavorable, passbook shows a debit balance due to overdraft facilities. So what amount has to be added? What is to be added? Number one, check issued but not yet presented for payment. Number two, interest and dividend received by the bank. Third, direct deposit made by the parties. Then, credit given by the bank on account of interest, bills collected by the bank, and checks deposited but not recorded in the cash book. These are items to be credited. Now we'll see another item to be added. Sorry, dividend collected by the bank. If dividend has come direct to the account in the bank account, so that has to be added in the cash book. Then another important is a wrong credit given by bank in passbook. Sometime a wrong entry has gone into the bank account, so that amount, by that amount of the balance has increased in the passbook, so that also to be added. Maybe later on that is deducted. So these were the item, 8 items which were to be added. Now what is to be deducted? What is to be less? Now we have added all the thing. Now all those transactions that have resulted in decreasing the balance of passbook. Here what we are thinking, all those items that have resulted in increasing the balance of passbook. Here now all those items that have resulted in decreasing the balance of passbook, that has to be deducted from the cash book to make it tallied. So what are items to be deducted from the cash book? Number one, checks paid into bank but not yet collected by the bank. Check pay कर दिए, we have paid the check. Check paid in the bank but not yet collected by the bank. 1 lakh balance, 90,000 balance, cash passbook. Out of this 10,000 sent for collection, but that has not been credited. So this amount has to be debited, 10,000 has to be debited from cash book to bring it at par with the passbook. This is one point. This is to be deducted. Number two, direct payment made by the bank. Sometimes auto debits are done by the bank. When auto debits are done by the bank balance is reduced, but cash book has not been taken into consideration. So that amount has not been taken into consideration cash book. So that amount has to be deducted from the cash book. Third, debit made by bank on account of interest on overdraft and bank charges. Bank has automatically debited the interest on a certain date and bank charges. So with that, the amount in the balance of passbook has been reduced. Then that has to be deducted from the cash book. Then dishonor of bill discounted with the bank. You have sent a bill, you have purchased the bill or check, and after some time that check has been dishonored or bill has been dishonored, and the bank has debited that amount with the customer account, that is passbook. So passbook balance will be reduced. So that has to be reduced from the cash book. Supposingly 1 lakh balance, here it is 90,000. Here the debit is of 10,000 due to the return of a check or dishonor of a check. So that amount has to be deducted from cash book to bring it par with the cash book, passbook. Okay. Then this is dishonor of a bill. Sorry, dishonor of a bill and dishonor check. One and the same thing. Then another important is check received and recorded in cash book but not yet sent to the bank. Check received and recorded in the cash book but not yet to the bank. Bank balance is less. Bank balance less, but company has credited that amount in the cash book. So that amount also has to be deducted. And again, a wrong debit given by bank in the passbook. Supposingly bank has given a wrong balance, a wrong debit has, so by that amount cash book has to be debited. So after doing all the things, so the balance will come as per passbook. We have to reach to the passbook. We have started with the cash book and we have to reach to the passbook. So here your reconciliation will be complete if the balance is given as per cash book. Reverse the case. If the balance is given as a passbook, then here the balance will come as per cash book. So this is what is called your pro forma of your bank reconciliation statement. So we'll go further with an example. We'll do an example of it. Simple example, we'll do it. In the question, favorable balance as per cash book is given as on 31st March 2021. Favorable means when the favorable balance is given as per cash book, it means a positive. Cash book will show a positive. So what is that balance is given? Balance as per ABC and company cash book was 23,500 debit, means they have a credit balance in the cash book or bank account mein they have a credit balance. So this is the opening आपका balance है. We always starting with the opening. This is 23,500. On comparing the cash book with the passbook, following differences were noted. These differences were noted. Okay, so I'll go like this. This is, let's start. First point was balance as per cash book 23,500. It is plus item. Why? Because it is a debit balance. Cash book debit balance means it is a plus. Now what they've done? Check for 12,500 sent for collection not yet cleared. 12,500 के checks हैं that has been presented for payment but they have not been cleared. This is 12,500. We have to find out where. Okay, I'll see to it. Then this point we have to check. Check for 74,000 issued by a firm not still presented. What does it mean? Check issued by the bank, issued by the firm. So here the cash book will be lesser. So we have to add it because that has not been presented. 7,000, 4,000 has not been presented. Then, sorry. Third, bank has credited 730 being interest not accounted for a cash book. 730 being interest not accounted for in the cash book. Interest दे दी है, but firm has not taken into consideration. Then this 730 has to be added. So this 730 has been added. Now the question comes your next. Check for 1,200 received from a firm customer not yet deposited in the bank. 1,200 received by the firm customer but not yet deposited. That means firm has credited their cash book and but not sent to the bank. That means that has to be deducted. So this 1,200 is to be deducted. Then another insurance of 2,500 directly debited by the bank not entered in the cash book. Again, what will happen? Insurance 2,500 directly debited by the bank, debit कर दिया है. So that has to be debited in the firm's account, means cash book is to be reduced. That is 2,500. Then bank charges again 125 debited by the bank in passbook That means not in the debited in the cash book. So this is also to be deducted 120, and this was left check for 12,500 sent for collection not yet cleared. So this is also to be reduced. Here wrongly I have written is 12,000. It is 12,500. This is 12,500. So finally, this plus this minus this balance will come. That will be balance as per the passbook. Only thing you have to remember which item to be deducted, which item to be added. All those items which increase the balance, they have to be added, and all those items which reduce the balance, that is to be deducted. So this is about your bank reconciliation statement. So that was when the starting point was passbook. When the starting point is the balance as per passbook, all things will be reversed. Everything will be, it will be reversed. Sorry. It will be vice versa, reversed. So whatever is adding, that will be deducted. What is deducted, that will be added. Simply way. So here, if bank reconciliation statement is prepared with the balance of the passbook either favorable or overdraft balance, the impact of all transaction on the cash book shall be as under. This will automatically reverse of what we have done in the previous column, where the balance is as per cash book, whether it's a favorable or unfavorable balance. Favorable or unfavorable balance, entries will be done like this only. Amount will be deducted and added accordingly. So what is to be deducted? All those transactions that have resulted in decreasing the balance of cash book. If you are starting with a passbook, we'll add all those transactions that have resulted in decreasing in the balance of cash book. जिससे भी cash book balance has been reduced, that has to be deducted. For example, check issued but not presented for payment for rupees 10,000. Now we are starting with the passbook. Okay, passbook balance is 1 lakh. Let it be. Now what happens? All those transactions that have resulted in decreasing in the balance as per cash book. So check has been issued but not presented in the payment. So if in the cash book, if the amount has been 10,000 has been taken, so this 10,000 has to be deducted from the passbook, so that it should be tallied with the cash book. Let's see. Now question comes. Now continuing with that, the same question we are doing it. All those transactions that have resulted in decreasing the balance as per cash book. Example, the same example which you have seen in the last slide. Check issued but not presented for payment rupees 10,000. In this case, what has happened? The issue of check has been recorded in the cash book on payment side but not entered in the passbook. Check issued have. In the cash book, this has been debited but not debited in the passbook. Therefore, the bank balance as shown by the cash book would be shown at a lower than the balance as shown by the passbook, because cash book showing 90,000 after deducting 10,000 for check issued, but that has not been presented for payment. Passbook is showing 1 lakh, so this 10,000 has to be deducted to bring it par with the cash book. So in this case, the issue of check has been recorded in the cash book on the payment side, but it was not entered in the passbook. Therefore, the bank balance as shown by the cash book would have been shown at a lower than the balance as shown by the passbook. So in the very simple way, in other words, the balance shown by passbook would be higher than the balance shown by cash book to the extent of the check. Means the passbook is showing more balance because that payment has not been made, and cash book is showing less balance, so that adjustment has to be made in the passbook by deducting that 10,000. Okay, thank you. Let's go to the next one. So what we have to add? What we have to add? Sorry. Okay. All those transactions that have resulted in increasing the balance as per cash book. Here it was decreasing. Here it is increasing. all those transactions that have resulted in increasing the cash book, that has to be added. Supposingly agar cash book balance is 1 lakh and cash bank book balance is 90,000, so 10,000 adjustment has to be made by adding here. Entries can be any. So what is that? Example: a check for 23,500 received from Ram, deposited in the bank. However, the bank could not collect the amount till 31st March 2021. Means, supposingly, let it be passbook balance 1 lakh, cash book balance 1 lakh. An entry has been made: 23,000 check received from Ram, deposited in the bank. When the amount has been deposited in the check, the firm cash book will be credited. So here the balance will show 1,20,500, but it has not been credited here because it has not been collected. So this amount has to be added in the passbook to reconcile with the cash book. So here an example: a check out to 23,000 received from Ram, deposited in the bank. However, the bank could not collect the amount till 31st March 2021, being the date of reconciliation. So in this case, deposit of check has been recorded in the cash book on receipt side, but it was not entered in the passbook. Therefore, bank balance as shown by cash book would have been shown at higher than the balances as shown by the passbook. In other words, the balance shown by passbook would be lower than the balance shown by cash book to the extent of that check. Clear? So let's go to an example. Will do it. A simple example will do it. Now the question is, favorable balance as per passbook is given. Favorable balance as per passbook is given. So when favorable passbook is given, so that means credit balance is there. So it's a plus item. The bank passbook of Umesh showed a balance of 32,007 on his credit. Umesh का account है and that is shown in the credit. The passbook shows a credit of 32,750. So when we are making a reconciliation statement, so plus item is 32,750 because it is a credit balance. Now what we have to do? Now let's question number A. Out of the total checks amounting to 21,000 deposited, checks aggregating 12,000 were credited up to 31st March. Means the checks were deposited by the party or the customer for 21,000, but only 12,000 were credited, remaining 9,000 were not yet credited. So what we have to do here? The balance. We have to add that amount to bring it to the cash book, because cash book they have already taken 21,000. Supposingly balance is 1 lakh. Again I am repeating it. 1 lakh in cash book, 1 lakh in passbook. Now in this cash book, 21,000 has been credited because they have taken into consideration when they sent the check for collection to the bank. But bank credited only how much? 12,000. So 9,000 difference there. So this amount has to be added in the passbook. So check deposit but not yet credited, 9,000 has to be credited. Then second point is, before that he had issued checks amounting to rupees 6,500, of which checks amounting to 3,000 have been presented for payment. And again, here they have debited 6,500 because he has issued a check firm name, but payment has been done only for, and 3,000 were presented for payment. Then difference amount 3,500 is to be deducted because he has taken that. So 3,500 has to be deducted. So check issued but not yet presented for payment, 3,500, that has to be deducted. Then next is check for rupees 2,300 drawn on a saving account has been shown as drawn on current account in the cash book. So this again wrong entry. So this amount also has to be debited. Check drawn on saving account but recorded in the current account, this 2,300 is also to be deducted. Then the fourth point is bills payable amounting to rupees 1000 paid by bank, but it has not been entered in the cash book. Bills payable amounting to paid by bank. Bank has paid. So bank account is debited. Bank has debited the account, but cash book has to be credited. So when we are going for the as per passbook, then that amount has to be added. That amount has to be added so that it should be tally with the cash book. Then see a bill for 6,600 was retired by the bank under rebate of rupees 100, but the full amount of the bill was credited to the bank column of the cash book. So amount was for 6,600. Bill was retired by the bank under a rebate of 100 rupees. So that 100 rupees has to be deducted from the passbook so that it should be tallied, because they have taken it as 6,600. So rebate of bill 100. So the balance will remain as per cash book. It will be 39,165. This will be tallied. So these, after adjusting the all these entries, the balance as per cash book will be 39,165, and the cash book is 32,750. So if the balance is as per passbook given, we have to reach as to the balance as per cash book, and if the balance is as per cash book, then we have to reach to the balance as per passbook. So this is all about your, what I'll say, bank reconciliation statement in a very simple way. It's very simple. You just remember which is to be added, which is to be deducted in case of cash book, starting with the cash book, and which is to be added, which is to be deducted in the case of passbook. But one thing is clear, one thing important, whether it is favorable or unfavorable. If you are going with cash book, the entries will be remain the same. Deduction or adding will be same. Same in the case of passbook. Adding and deduction will be the same, even if the account is in favorable or unfavorable balance. So this was all about your bank reconciliation. I hope you must have understood it very well. So it's very easy, very easy. So you can easily do that question on bank reconciliation statement. So we'll be coming again with a new session tomorrow with some new important topic. So before ending, I request all of you to please subscribe, share and like the video. And thank you very much from Bankers Zone Arena. Thank you very much. See you again. Thank you.